In this video, I'll teach you my pocket option trading strategy and how I find better entries that helps me make consistent profit regularly. Let's go. This video is not financial advice. Everything shown here reflects my personal trading journey and is shared for educational purpose only. Please remember, you are fully responsible for your own money and trading decisions. Trading carries significant risk and results may vary depending on your experience, strategy, and risk management. These videos are simply me documenting what I do in the markets. Always do your own research and trade responsibly. Price hit the liquidity zone. I am expecting a reversal. First, I will take a trade and then I will explain you the setup and the strategy behind. This is a liquidity zone where stop losses are available. And I'm expecting a reversal here. I need strong confirmation. This is 5-second chart. I'm analyzing the chart on 1 minute time frame, but this is 5-second chart for confirmation purpose. I need strong selling confirmation, then I will place a sell trade for 1 minute expiry. And yes, we have got the confirmation and I have placed the first trade in the downward direction for a sell. Let's wait for the result, and after the result I will explain you why I was expecting a reversal from this zone. Let's wait now. We have won this trade. Let's understand the logic behind this trade. It's a simple trading setup. So to understand the logic, we have to focus on the seller's activity here. As you can see, that price started showing downtrend here. So we have to focus on the selling side because the direction of the market decides where we are expecting a reversal. In this case, as you can see, that when price it was going up, it was actually a retracement phase, and after the retracement phase we can expect that price will go down for a run. So if price wants to go in the downward direction, it will not go straight like this. It will first fall, then it will retrace back for hunting stop losses, then fall again, then retrace back, then fall again, then retrace back, and finally it will reach like this. To reach this zone, the price has to move in this particular manner. We have used the same logic here. Now as you can see that this is the run phase. I'm expecting that price is reversing to grab liquidity, and by liquidity grab I mean stop hunting. So if you focus here, this particular move, you will see, you will see that price here get consolidated, and this particular candle gave a breakout. Now this candle gave a breakout. This is change of character. Now because the trend is downtrend and this is a strong selling candle giving a breakout from this consolidated zone, it is showing that the price will now fall, and that's why the retail traders will sell here. They will likely to place sell orders after having this candle because it is a breakout candle and it is a strong confirmation. So they will most likely to place sell orders here, and now if they are placing their sell order here, they will not going to use this zone for their stop loss. They will most likely to use the nearest resistance, which is here. So they will most likely to place their stop loss inside this zone. I'm talking about the majorities. Some of the traders might use the upper wick of the candle, but I'm talking about the majority. The majority of traders will place their stop loss here, and if their stop losses are here, the price will most likely to reverse, will hit their stop loss, and then it will reverse again. I use the same concept, and you can see that price reverses from this zone. I'm not telling you that the price will now fall. It can go up and can take liquidity from this zone as well, because you can see that price left liquidity here as well. And that's why I use this zone, because here I was expecting so many stop losses are available, and that's why I targeted a reversal from this zone, and I used 5-second confirmation and we booked profit easy. It was a simple trading setup. I was just thinking like a seller. If I was a seller here, I will most likely to place my stop loss here if I sell on this candle, and that's why I use the same zone. Here you can see that price is forming a little uptrend, but it is forming this uptrend just to grab all the liquidity at one go. You will see in the future that price, it will keep on pushing in the upside direction, will grab more liquidity, and then finally it will fall and it will take all the liquidity from these buyers. That is my expectation. I'm not claiming anything here, so it can happen in the future. So right now we have taken the first trade. Let's find other trading setup on this particular chart. If price goes up, I will use this zone for a reversal trade, because after this strong fall there was no retracement, so the price can go up like this, and then after hitting this zone it will reverse. That is my expectation. So let's wait. If price goes up and hit this zone, I will use it. Otherwise I will find other charts to play a successful reversal trade using the same basic logic of liquidity sweep or liquidity grab. Let's find other trading setup now. Price approaching the liquidity zone. Okay, it hit the zone. Let's take a reversal trade here. We are expecting reversal. I have told you previously that I have high expectation of reversal. I have placed my trade because we have strong candlestick confirmation on the 5-second chart. Let's wait now for the result, because according to me the price is going up to grab liquidity, and once the job is done it will start reversing. Let's wait now for the result. Okay, we have lost this trade at the very last second, and I still think that price will reverse, so I will take one more trade here because chances of reversal are really high. Let's open 5-second chart. Price, okay, it will reverse. Sometimes we can see a delay in reversal, but in reality the price will reverse. Yes, we have confirmation, and I have placed the second trade using the same zone. The last trade we lost, but I think this time we are going to win this trade because the price ultimately have to reverse from this zone. If we talk about the upper levels, I don't see any major liquidity zone, and for me this is the most important zone for me. Let's wait now for the result. Okay, this time we have won this trade as we were expecting that price will reverse from this zone. Let's understand the logic behind these two trades. So initially when I took a trade for a reversal here, I told you that if price goes up it will reverse from this zone, because this is the liquidity zone, and price then will fall straight like this. That is my expectation according to my analysis, because it has left liquidity at the bottom. So it will grab this liquidity in one go. So why I was expecting a reversal? It is a simple fact that you can see that price started showing a downward movement, and after showing this downward movement you can see that price retraces back. Now after the retracement you can expect that price will reverse. The price reverses here, and for those traders who were thinking to place a sell order, if they see a candle like this at the top, they will most likely to sell, and after that you can see continuous fall in the price. Because of this continuous fall, you can see that this selling move started right here. Now if the selling move started right here, and if I was a trader at that time, I should have sell the market at this candle with my stop loss above this candle, most likely on this zone. And after that you can see the continuous fall, so these traders might have their stop loss in this zone. But I'm talking about the initial move. The initial move started here, so this is where I will most likely to place my stop loss, and that's why I was expecting a 1-minute reversal. The price is going up, which I was not expecting, because according to me the price should fall. Maybe it is going up to grab liquidity from the traders who have high risk taking ability. We are only targeting majority of traders who risked only few pips, because they most likely to target bigger profit with minimum risk, and that's why we always chase traders which have low risk taking ability, and that's why they have smaller stop loss. So this is the zone where I expect that there are multiple stop losses of multiple sellers, and that's why I use the same zone for reversal. Here also the situation was similar. Because of this breakout, I used this zone for the reversal because I was expecting those who were selling here or here, they will have their stop loss here, and those who are selling here, here or here, they will most likely have their stop loss in this zone. And that's why I use both these zones for my reversal, and I successfully took the reversal trade, except the second trade which I lost because the price pushes up, but ultimately it reverses because I was expecting a reversal. Sometimes the price can take more than 1 minute to reverse, and because we have a limited expiry, a fixed expiry of 1 minute, we lost this trade, but it was at the very last second, so we lost this trade by 2 seconds, I guess. But ultimately the price reverses, and now you can see that price, after sweeping the liquidity from the upper zone, showing reversal, and in future I'm expecting that price will fall. So we have taken 3 trades, and that is my limit for any trading session. I do not trade more. If I make profit after 3 trades, then I usually close my session. And today you can see we have booked 2 profitable trades. One was a loss, but overall I'm in profit, so I'm ending this session here. I hope you learned the trading strategy that I use. If I want to summarize my strategy, it is very simple. Just act as a buyer or seller and try to find where you will place your stop loss, and use the same zone for a reversal trade using 5-second confirmation. I hope this teaching will help you be profitable. That is it for today. Thanks for watching. We'll see you in the next video. Till then, keep trading, keep working hard. Good day.